What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. We have a lot of great information to share with everyone in today's video. We have some news about Biden's infrastructure plan, some of the hottest stocks today, and at the end of the video, we have a $53 million options trade that expires this Thursday, April 1st. There is no trading on Friday. Don't forget about that. But with that being said, we have a lot of great plays today. Make sure to stick around for the end of the video, and we actually have some really good news, and that's that Tom is back. So Tom, fill us in. What happened in the market today? What should we be watching out for?
Yeah, the markets were actually pretty choppy today on my first day back, of course. And, they went up, they went down, but at the end of the day, they started to really tank off. And then they started to really climb back up at the end of the day, which was pretty interesting. But I think that we might still see the market down tomorrow. We'll have to see. It was actually very flat. As you can see, we pretty much traded between a range. But 21 Senate Democrats urged Biden to put recurring stimulus checks in the recovery plan. And they said this crisis is far from over, and families deserve certainty that they can put food on the table and keep a roof over their heads, the senators wrote. So they wrote that, and we've been getting some stimulus checks of varying amounts. One was $600, one was $1,200. The recent one was $1,400. So they might vary the amount, so just watch out for that. But it looks like we might get recurring stimulus checks, and it seems like that every time we get a check, it helps the economy. So hopefully, we can keep getting the checks, and it can help the economy more if people actually spend it, on the economy, that is. But I think most people do.
Very interesting. And Tom, we can't forget about ARKX. It debuted today, had a little bit of volatility, but what do you think about this one?
Yeah, ARKX had a very wild day. Opened at 2050 and ended up just having a crazy volatile move within that first minute, all the way up to 2070, and then back down, hitting $20.07 at the lows today, and kind of almost had a double bottom there, and then started to come back up. I grabbed a few hundred shares, or not a few hundred, a couple hundred shares at 2046, and then 100 shares at like $20.15, kind of averaged in a little bit here with the starter position on this stock. I think it'll be very good for the longer term, and Kathy Wood is just a pretty smart investor. And I also have a picture here of their holdings. I know, Mike, you talked about this yesterday, but I really like their holdings here. Lockheed Martin's one of my favorite stocks as of late. So is Boeing. I think those two stocks can recover very nicely over the next month or 2 months, and they just have a lot of stuff in here. They have Nvidia in here as well, Amazon, Alphabet. So there's a lot of good stocks in here that have been going up, and I think that they could do pretty well. But some of these tech stocks look like they might start to fall back down, which might hurt this stock in the shorter term, which is why I'm only just starting to average in. I'm not just going to throw all of my money onto this stock just because of how heavily weighted it is with these bigger tech stocks.
Awesome stuff. So we all know that Kathy Wood has done an amazing job this year. Most of her funds have just exploded, especially ARKK, her innovation ETF. In the past year, went from lows of around $39.40 to highs of $159.70. So she has done just an amazing job, and I'm very excited to see what this fund does in the future. However, it does have some pretty wild swings because it does hold a lot of volatile stocks, like especially Tesla and a lot of other tech stocks. So either way, I'm very excited to see how this stock performs over the next year, and also just in the long term.
Yeah, for sure. I mean, I think ARKX could be amazing, especially with space getting going. I think that once we actually get out into space, that's whenever we're going to see this really explode. And obviously, there's just not a lot of space stocks even in there. We saw the big tech stocks, and then we saw, they have a little bit of stocks like Virgin Galactic. They have 1.94% of that. So it's not really like there's too many actual space stocks out there yet. And I think that once those come out and then those start actually popping, that's whenever that's whenever you'll see the growth out of it, like we've seen with ARKK.
Good stuff. And then is there any other major news for today?
Yeah, CNBC reports that President Biden will actually be unveiling his infrastructure plan on Wednesday in Pittsburgh, but he may not provide all the specifics on how he will fund this. And man, you can see that I just pulled up the SBDR Dow Jones Industrial ETF here, and you can see how good the Dow has done this year. But they say that tax increases on corporations and wealthy individuals are expected to be one way that they can fund this infrastructure plan. And they said that this could get a negative reception from the markets when these details are available. So if he goes into detail Wednesday and starts talking about tax hikes on corporations and on businesses, you might really see the markets start to pull back this week. And that's just a pretty big deal in the shorter term anyways. In the longer term, once the infrastructure deal gets into place and stuff gets going, it might get better. But in the short term, companies are not going to like that they have to hear that they're going to have to pay more taxes and stuff.
Awesome. So let's get right into our momentum plays for tomorrow and the member of the day. Today's member of the day is Mike D13. So huge shout out, Mike. He actually traded your AMD play today, Tom. So I know you called out AMD puts as a day trade, right?
Yeah, I called them out as a day trade and ended up falling below the support, and it was just an awesome day trade. A&B tanked right at open to lows of 74.85, and then just traded back up throughout the day. But it was an awesome day trade by him, and once it fell below that support around 76.40, it was just free falling from there.
Awesome. So if you guys want to get completely free day trades from Tom and I every single morning, you can click the Discord link in the description down below. Like I said, completely free, free day trades from Tom and I every morning, and access to a community of a bunch of other traders. It's completely free, and it's the Discord link in the description down below. But with that being said, let's get right into our momentum plays for tomorrow. And with the first one, we have MARA. This stock did amazing today, up around 16%. Tom, what levels should we be watching?
Yeah, with MARA, go ahead and make it pop above 45.45, which is the high today in after hours.
All right, and then we have NIO, which actually had a pretty great day.
Yeah, with the NIO, make them pop above $38 even. And I really like how this one consolidated at highs today.
Awesome. And then with the last one, we have GM. I was really eyeing this stock this morning. What do you think?
Yeah, General Motors, make it pop above 58.63 tomorrow. And I think this one looks great. It's just stair stepping to the upside, and it's trading above all the SMAs, which is awesome as well.
Sounds great. So we are eyeing all of these stocks for potential day trades to the upside tomorrow, only if they can break above the levels Tom listed, just for quick in and out day trades. But with that being said, let's get right into the $53 million trade for this Thursday. So we are looking at the Tesla 600 strike puts that expire this Thursday, April 1st. Like I said, there was $53 million put into this play, and I think it's a really tough decision, Tom. They're only about $36 out of the money, and they have, about 2 days left of time. So I can really see Tesla going either way. It had a lot of upwards momentum today, which is a bullish sign, but I don't know. It's pretty tough. What do you think?
Yeah, it opened today right around 600, fell below it to 591, and then just went up. So, man, I just, with the way Tesla went up today, I think it might continue up tomorrow as well. So I would think that they might be shorting these puts, given how much money's going into it. And then also at the same time, if they lose, then they can just pick up shares at $600. So I would definitely think that they're shorting it, thinking that there's a pretty good support around 600. And plus, at the same time, they probably just don't even mind picking up Tesla at 600, even if it falls back down to 500 or 300 over the next couple of years. I think that they're pretty bullish on it for the longer term, maybe.
True that. I mean, I guess that would make the most sense, because there's only 2 days left of time, and the options are about $36 out of the money. So it seems like it would be a complete gamble to buy those puts, but if they sold them, they would have time on their side. In the worst case scenario, they're picking up shares of Tesla at $600 each. So I think the most logical answer would be that they're shorting these puts, meaning that they want Tesla above $600 by this Thursday. But let's get
And
right.
it would make it actually pretty interesting if Elon Musk came out and tweeted that Tesla's stock price was too high again. I think that we might know that these people knew something again.
True, that happened. What was it? A couple months ago now. There was just crazy amount of options being traded on Tesla. Like here, wait, Tom, what was the situation again? So they were selling calls, and then Elon tweeted that the stock price is too high the next day, and then Tesla tanked.
Yeah, and it was like a $25 million position too.
Yeah, so long story short, someone sold a bunch of calls on Tesla, and then the next day, Elon came out and tweeted that Tesla stock is too high, and then Tesla tanked, obviously, but you just got to be careful with unusual options activity. But let's get right into the questions from the previous episode. With the first question, we have JW saying, "Do you think you could break down Walmart? I'm wondering if you guys see it rising anytime soon." So let's take a look at it. It looked like it had a ton of potential to the upside yesterday. It kind of like got rejected today, which isn't a good sign. I saw unusual options activity on the 130 strike calls that expire on April 16th, which is always good to see. They're in the money calls and they have time. But like I said, Walmart got rejected today, so I'm a little bullish on them, but not a ton. What do you think?
Yeah, they got rejected around 137.50 and then they bounced off support around 135 around the end of the day. So I think we're just going to have to see how it goes tomorrow with Walmart, but hopefully it can kind of creep back up there and pass back above 137 and back above 137.50 as well.
All right, with the next question, we have TV saying, "Hey, Mike and Tom, what do you think of swinging the 50 strike calls for VIAC expiring on April 9th?" So I know I talked about this a little bit in yesterday's video. I like it, but it's just super risky. Like it's a complete gamble, honestly. I do like this setup. Like I said, it's extremely risky. It looks like it has potential to bounce. The stock price fell literally over 50% in a week. So you'd think there'd be some sort of bounce, but I know there's a lot of negative news around this stock, and there's a lot of selling pressure. So honestly, it's a complete gamble, but I kind of like it.
Yeah, if you guys like to gamble, this might be the stock for you, but I'm not a gambling man, so this is not the stock for me.
All right, with the next question, we have William saying, "Great video. What do you think of Tesla testing its highs of $900 in the next 2 to 3 weeks?" So I ran a probability test on this yesterday, and there was about a 1.87% chance of Tesla closing at $900 on April 23rd. So obviously, most likely Tesla will not be at highs in 2 to 3 weeks. With that being said, I like it for the long term. And if you plan on playing Tesla, please keep in mind that they have pretty expensive options. So if you buy shares, it could, especially if you like them for the long term, that would just be the safer route. What do you think?
Yeah, I think just go for shares because sometimes these options are so expensive. Like, let's just go to the chain really quick and type in Tesla here. And let's just go to like May 21st, for example. As an at the money option is going to cost you around $6,400 at the call. So that's pretty high if you ask me. And pretty much you're risking $6,400. The Tesla is going to go up over the next few days unless you hold it all the way to expiration, which could get even riskier.
Yeah, and what sucks is like, because Tesla does have expensive options, you can buy that call, Tom, and Tesla can go up and you can still lose money. So for example, you said it was like $6,400. So let's say in that time frame, Tesla only goes up $20 or $30, you would actually lose money on that call, even though you were 100% right on the direction. Where if you got shares, you would obviously be in a winning position. So shares would probably be the way to go unless you're extremely bullish on Tesla. With the next question, we have Royal saying, "Can you review Home Depot?" So HD, they had an amazing, past couple weeks, past month. I really like it. It is a little overextended, so it makes me a little bit worried. Like if you're buying now, I like it for the long term. Just keep in mind, like it had an amazing month. It literally went from 250 to $305 since what is that? Since March 5th. So it's basically been doing nothing but go up. I think they only had 2 red days in the past month, which is pretty crazy. So I think I don't know if you're looking at this for like the short term or the long term, but for the long term, maybe consider averaging in or cash secured puts. And with the short term, I'm just pretty neutral.
Yeah, me too. It looks like it's going to go up In the shorter term, to me, maybe it might pass above 305. But I'm with Mike. It's a little overextended here. I would definitely average in. I would not go all in at these highs like this. And I think that this stock's done so well because of how the housing market has just boomed. The price of houses have went way up, and had the market overall just boomed. The houses were getting bought up as soon as they got put on the markets, and people were in bidding wars for houses. And people were saying that all these home buyers are going to have to use Home Depot and stuff for their houses, and it looks like that really is truly helping Home Depot here in the longer run.
And then another thing too is I know that there's a supply shortage. So, they have a lot of demand, but not enough supply. So it's good for Home Depot. And, overall, they just look pretty good. With the next question, we have Luke saying, what do you think of SEAC? So he said he bought in at $1.50. I do not like this stock for the long term. If we look at their max weekly chart, it looks like they went all the way up to highs of $76. And that was in, what was it, 2000. And ever since that point, they've just been slowly declining. Right now, they're at $1.47. So I don't like them for the long term. For the short term, they look okay. They have a decent amount of upwards momentum. They have some pretty strong resistance at $2 and then $2.25. So I would just be neutral on them unless they can break above $2 to $2.25 with momentum. Then I'd like it for like a quick day trade or something like that.
Yeah, that's how I would play it too. The stock is down 29% today, so just be very careful with it. I think it's going to be pretty risky.
With the next question, we have Joshua saying, what do you think about AI? So obviously, I love artificial intelligence for the long term, but AI stock, it looks pretty good, not amazing. Obviously, they IPO'd right around $100. And ever since that point, well, they ran up a little bit after they IPO'd, but ever since February, they've just been slowly declining. Right now, they're around $63. I love the sector for the long term, and I think the best way to play this stock would be cash secured puts. Basically, you could get paid to buy this stock at a low price. And a perfect example of that would be if we go to like let's say the April 16th expiration, you can sell a 50 strike put and you could get paid around $60 for doing that. If the stock is below $50 by the expiration date, you buy 100 shares at $50 each. And if you like it for the long term, it's kind of a win-win. And let's say AI is at any price above $50, you keep your premium and run. So if you like it for the long term, I think cash secured puts would be the best way to go.
Yeah, and honestly, I think that with it being so low right now, if you like this sector, it could be a pretty good stock for the longer run.
For sure. And then with the last question, we have Jimmy saying, what do you think about Fubo? So, Tom, I know you were looking at this one a couple weeks ago. It's sitting right at that support around $20. What do you think?
Yeah, I'm glad it's at the $20 support now. It fell below the other support around 25 or 26, and it just tanked all the way down to 20. But I think this stock will be good for the longer run, especially with sports gambling and stuff. This is kind of like a sports streaming service. So I think it'll be good for the longer run. But in the shorter term, it's looking pretty bad. Hopefully, it can hold the $20 support. If it breaks below that, then it could go. It could keep going all the way down, possibly to the support around 14 then. But I will say in the longer run, I like it as long as it can hold the support.
All right. Well, Tom, do you have any last minute stocks, options, or any insight for the market for tomorrow?
Yeah, I think that we should just start to be pretty careful with the market. We're getting pretty close to all-time highs again. I mean, if we break above this high of 398.12, fantastic. We can just play the market with that momentum to the upside, but just be careful because if we get rejected there, we could see some downwards movement, especially with this infrastructure plan coming out on Wednesday. If there's some big tax hikes or something like that in there, that could really hurt things. I've heard that they might try to reverse some of the 2017 tax cuts. And if that happens, then I think that could make the markets go down. So just be very wary of that.
Very interesting. And I want to point something out. So you said that we're getting close to all-time highs, and we are on the S&P 500 and the Dow, but the NASDAQ is still lagging behind. So all these tech stocks that everyone was so hyped up about a couple months ago, they're kind of doing nothing. They're just back and forth in these small channels, and they don't have the momentum that they had a couple months ago. So overall, I still like them for the long term, but just notice how we're seeing a rotation out of tech and into value stocks. So really look at some Dow stocks like Goldman Sachs, CAT, Home Depot, AXP, Boeing, what is it, Walgreens, Disney. A lot of those stocks are doing very well. So, even though they're slow movers, they still definitely have a lot of potential. But thank you guys so much for watching this video. If you want to trade with Tom and I every single day, day trades, swing trades, and access to our bots, you can click the first link in the description down below for about $40 off. And also, don't forget to subscribe to Tom and I's new channel, Stocked Up Live. It'll be the link in the description down below. We're going to be live trading, live streaming, so don't forget to subscribe. We're going to be live trading pretty soon. We're going to give some more updates in these videos, but don't forget to subscribe. If you have any questions, let us know in the comments down below. But other than that, thanks for watching.